Hello guys, welcome to Vaishnav Chatters. Today we are going to do accounting and bookkeeping in accountancy. Firstly, we should know what is accounting. It is a process of recording, classifying, summarizing financial transactions. We need it for taking decisions in business. Now, what are the advantages? The advantages are: first one, completes record of all business transactions. Second one, ascertains profit or loss. Third one, ascertains financial position of the business. And the fourth one, helps in decision making. Now we should know the disadvantages. Disadvantages or limitations. I am explaining this in the simplest form of words, so I think you may understand. So, in disadvantages, the first one is records only monetary transactions and non monetary transactions are ignored. Now, the second point in disadvantages are historical cost basis. The third one is forecasts are not considered or included. You may write in any other way. Now, we have completed the introduction to accounting. Now we are going to do the introduction to bookkeeping. So, bookkeeping. Bookkeeping. It is an art of recording business transactions in regular and systematic manner. Now, this is a definition for bookkeeping. Now we are going to do the difference between bookkeeping and accounting. Now, now we are going to do difference between bookkeeping and accounting. This is difference. Now we should put headings: bookkeeping, accounting. We should draw lines and write. We have drawn the lines. We will continue. First one, difference. In difference, what is the difference between the scopes of bookkeeping and accounting? In bookkeeping, it is concerned with recording business transactions, and in accounting is the definition which we have written in the starting of the video in the introduction of accounting. The second one is objective or aim. Objective or aim. Right. In objective, it is maintains systematic records. In accounting, it is ascertains financial position. The third one, it is nature. Difference between the nature in bookkeeping and accounting. Firstly, in bookkeeping, it is clerical, and in accounting, it is executive. The responsibilities are: in bookkeeping, the responsibilities are responsible for recording business transaction only. It is only meant for business transactions. And in accounting, it is responsible for preparation of financial or final account, financial condition or final account. The last one is supervision or supervision. In banking, in bookkeeping, does not supervises the work, but in accounting, supervises and checks the work. Here are the five differences which we should know in the difference between the bookkeeping and accounting. Now let's do the principle of accounting or accounting principle. First point is it is the procedure which guides the accountant, that is the person who settles the accountant in preparation of accounting records. The second one is it has two categories of accounting principle. The first one is accounting concepts, and the second one is accounting convention conventions. Right. We are going to talk about accounting concepts now. Accounting concepts. There are six types of accounting concepts. They are the first one, business entity concept. The second one is going concern concept. The third one is dual dual aspect concept. The fourth one is cost concept. The fifth one is money measurement concept. And the sixth one is accounting accounting period concept. Let's go forward with the definitions or the points of these six concepts to understand better. Now we are going to learn about business entity concept. It is also known as separate entity concept. The second point is, this is the first point, this is second point. The second point is the business is separate from person, that is owner, who supplies capital, means the products. This is the meaning of business entity concept. Now we are going to talk about going concern concept. The first point is it has a long life for business, unlimited periods. It means there is no end for the period. We can run it as long as we want. The third point, this concept support the treatment of prepaid expenses as asset. This is the following going concern concept. Now we are going to do dual aspect concept. Now they have two folded aspect. Aspect. It means that for every debit there is equal and opposite credit, right? As Newton said, every action has equal and opposite reaction. The same implies here. Every debit has equal and opposite credit. Now we now we are going to do cost concept. Cost concept. Right. An asset is recorded at cost acquired at the time of purchase. It will systematically reduce its value by charging depression depreciation. These are the 2 points for the cost concept. Now we are heading forward to money measurement concept. Right? Monetary transactions are recorded. It is also called as fundamental accounting. The second one is it is the practical unit of measurement. Okay. Now we have completed the money measurement concept. Now we are going to do the last one, accounting period concept. Now in accounting period concept we have the first point, that is period to known result of investment is called the accounting period. It The second point is it depends on nature of business. And the third point is 1 year period is necessary or compulsory. Now we have completed all the concepts of accounting concepts. Now we are going to do accounting conventions. Accounting conventions. Here we have only four conventions. They are convention of disclosure. Second one, convention of materiality. Third, convention of consistency. Third, convention of conservatism. 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 Right, conservatism. We have here 1, 2, 3, and 4. We are going to discuss now the first one, convention of disclosure. First one, discloses or shows. You can write it as shows. Complete information based on, second one, based on which decision are taken. The third one is information published in financial statement. Now we are going to talk about convention of materiality. First point is only those events should be recorded which has or have significant or significant or significant bearing and insignificant thing should be ignored. Here we have got an example through which you can understand easily. That is 20 rupees for dustbin is not recorded, but machinery for product is recorded. Recorded. This means the dustbin which is unnecessary for the product is not taken into the recording, but the machine which is the main for this product is recorded. That means the ignored one is unnecessary for the product. That's why it is not recorded. Now we will talk about the convention of consistency. Right? Yes. Now we are going to talk about convention of constituency. Right. Convention facilitates comparison of performance. These should not change from one year to another year. Here we have got example to understand in a better way. An organization should not change method of recording. That means the organization which have been started an year ago should not change its method of recording after a year or 2 years, etc. We have completed the convention of constituency. Now we are going to talk about the last one, the convention of the conservatism. Now we are going to talk about convention of conservatism. Right. It anticipates or anticipate no profits but provide for all possible losses. Policy of caution safeguard for for uncertainty. So we have completed all the conventions and concepts of accounting. In the next video, we are going to learn about double entry system and the golden rules of accounting. Thank you for watching. If you like or feel good looking this video, like, share, subscribe my channel. Vaishnav Chatters. Thank you.